Welcome to Finding Certainty with your host and U.S. Army veteran, Patrick Laing. Over the next hour, you'll learn from Patrick and his expert guests how to attract more certainty into your business and your life. Now, here is your host, Patrick Laing.
Welcome to Finding Certainty. If you're a new guest, we appreciate you stopping by. If you're a returning listener, we appreciate your patronage. It's always a pleasure ending the week and starting our weekend together. Today we have a very special guest, good friend of mine, Mr. Adam Dawson out of Henderson, Nevada. He is the CEO and a partner at, tell me the name, Adam, to be exact. It is Capstone Capital Wealth Advisors, correct?
That's correct.
All right. It's a mouthful, but I was hoping I didn't get it wrong.
No, you're good.
So Adam is he's a good friend of mine. Actually, you're the first person that I've had on my show that I know from church. Actually, we have that connection as well. I've had guests from all over the country, and you're one of those, right in my neighborhood, right here, right in my my own congregation. And there's some connections there that I really appreciate. So looking forward to visiting with you today. Thanks for taking the time. I know how busy you are.
Absolutely. My pleasure. Looking forward to the conversation as well.
So, here on Finding Certainty, we look at this topic and we analyze this topic of creating certainty in our lives from a number of different angles. We've looked at it in relationships and business and health, investments, et cetera, et cetera. And you're a wealth advisor, I guess the best word is an investment advisor, but more than that, you're a wealth advisor, and you help your customers to how would you best describe it? To prepare for their futures, prepare for their retirements, make sure they're protected. And you do this in a number of different areas. It's not just their investments, correct?
That's right. Absolutely. We view ourselves as almost like a personal CFO. So there's so many aspects of a person's financial life that need to be addressed. Investments are a very important part of that, not only preparing for retirement, but living throughout retirement. How do they get the income that they need throughout the rest of their lives? Most people prefer not to run out of money before they pass away.
Right.
And like to leave something to their heirs if there's anything left over. So that's a really, really huge, important part of that, especially with the market the way it's been the past couple of years. Just lots of ups and downs, lots of uncertainty, which we think it's really important to understand how to embrace that uncertainty, which is kind of an interesting topic. Maybe we can dive into later in conjunction with the topic of your podcast overall, right? It's finding certainty through the uncertainty. But right. It's not just the investments, though. It's so many other things. How do we manage risk in other areas of their life, whether it be just looking at their insurance and legal documents? Do they have wills and trusts, asset protection, tax planning? How do we help them save money on taxes, not only today, but throughout retirement? What are gifting strategies for their kids or other charities that they feel passionate about? And then probably the most important out of all of those things is the emotion of money. How does money impact their relationships with their spouse if they're married or other people they care about? Money, everybody thinks money is about math. And actually, one of our newest clients is a mathematician. And he said, wow, investing is not math. I tried doing this on my own, and it is not rational. It's not just about the numbers. It makes no sense sometimes. It's very, very emotional. And so we view ourselves as coaches more than anything. How do we help people make really sound decisions when life just comes at you? And it can be really scary sometimes to know what to do. Absolutely.
100%. It's definitely an area where people feel a great deal of uncertainty. They're seeking certainty in that area of their life. And just as you alluded, there are so many moving parts, right? There's so many aspects that affect our financial outlook and our wealth, from insurance to taxes to our maybe our succession plan from our business, et cetera, et cetera. I had a guest on a few weeks ago named Angel Tussey, and she's a media specialist. And just on a whim, she searched up the word certainty and how many times that word had shown up in media and online, in podcasts and blogs and radio shows, television shows. There were thousands and thousands of hits just in 24 hours, right? But then we searched up the word uncertainty, and there were tens of thousands of hits, right? And I mean, just in a 24-hour period, tens of thousands of appearances. So it's definitely a topic of interest, topic of concern for Americans and people all over the world. And so, I want to get into what you do and how you do it, because I think it's really important. And because you are a fee-based firm, there's some, I think, even pros and maybe even some cons to that, or some considerations. But before we do that, let's get into your background. I always like to start out and say, sure, a couple of reasons why I've invited this guest on. First and foremost, who you do business with is as important as what you're doing. And I always say a company's only as strong as the people behind it. And I wanted to invite Adam. I mentioned our relationship through church, but I wanted to invite him because he is one of the most impressive people that I've met from an integrity standpoint, from a leadership standpoint. Just one of those guys you want in your corner, and he goes out of his way to serve in the community and in our neighborhood, in our city here, and I know that translates to his clients. And so it's a really important piece of what we're going to talk about today, because I think if you have that servant mindset and that servant's heart, it makes you a much better business person. We see good examples of that and bad examples of that, of course. But secondly, Adam's a published author. He came out with he's published 2 books that we'll be talking a little bit about. And they dive into, especially this last one, dives into the mistakes that many of us make trying to invest on our own or trying to tackle our wealth strategy. Just as you said, your mathematician client, we try to do it and we do it wrong. We're making mistakes. I think, just as the title of the show says, how smart people lose money in investing, right? You can be intelligent, you can be brilliant, like your mathematician friend, but we're still making mistakes. And so I want to talk about those. I know that's it's a topic of big interest to our listeners. How do we prepare for our future, and how can we avoid the pitfalls that so many of us make? So let's jump into your background. Tell us a little bit about where you grew up and what brought you to today. I know you're a musician and a composer as well, which I think has some interesting elements and maybe layers in who you are and what you do. But who is Adam Dawson?
Well, thank you, Patrick, for the very kind words. And by the way, likewise, very impressed with and grateful for your service in the community. I just love people and just want to do whatever I can do in my little corner of the world to help them make the world a better place. And I think a big part of what drives my desire to help other people is we were really poor growing up. And poor is a relative term, right? I mean, we didn't live in the deserts of Africa, without enough water to drink. And so even I would argue that the poorest people in our country are very, very rich compared to much of the world. So I don't mean to make it bigger than it is, but by American standards, my parents were divorced when I was 10. They really struggled. It turned a bad financial situation into a worse financial situation. We didn't have beds to sleep on. We washed our clothes by hand in the bathtub because we didn't have a washer dryer. We walked everywhere. We didn't have a car. We took turns eating dinner because we only had one plate, one fork, one spoon between the 4 kids. This is right after my parents were divorced. And we were on welfare a lot, so I'm really grateful for those systems that during our biggest time of need, we were able to survive. And lots of people pitched in for, Secret Santa at Christmas time and those types of things. So it's hard to talk about those things without getting emotional. But I just I know what it feels like to not have any money. Right. And, loved music, had some success with music, studied music composition at Brigham Young University. And I love it. I play piano, I sing, but composing is really my favorite thing. and really just touching other people's hearts through music is what drives my motivation there. But having grown up with the financial background that we had, I know that you can, and I have friends that have been successful in the music business, but I just decided I didn't want to take that risk. Actually, one of my professors said that if you can find anything else that you could possibly do that you would also enjoy, that's not music, then try that first. And so there's a really good book. I've probably told 1,000 people to read this book. It's called What Color is Your Parachute by Richard Nelson Bowles. He was a pastor and basically quit his job as a pastor because he found even greater meaning in helping people find better work, more meaningful work that's good use of their skills. He makes the argument that, sure, we'd all love to do just whatever we think is fun for a living, but doesn't always translate into what people need, what people are willing to pay for. And so he has a series of exercises he recommends that helps you really think about, okay, well, in my case, I love writing music and some other things too. I sold pest control door to door during college, had a lot of success with that. I was leading my high school musical. I wrote a piano concerto. I performed with my high school orchestra.
Right.
And so just a lot of these things, he said, take all your favorite experiences, things you're the most proud of, mission for my church in Argentina for 2 years, and then start to analyze, are there any similar characteristics among all of these different things that these rewarding experiences you had? And as I went through those exercises, I realized, wow, I love working with people. Every single one of these things is working with people, making a difference in a meaningful way. Now, some may argue that killing bugs isn't quite as meaningful as helping them with their retirement, but I still felt like I was doing good.
Right.
And then having a job where my creativity was put to some good use, where it wasn't just, sitting in a cubicle and following orders all day, every day. And then the last thing is just something that had some kind of analytical aspect to it. So as I explored lots of different careers, I learned more about what it meant to become a wealth advisor, financial planner. I'm a certified financial planner, CFP. And it just was kind of like this ding, ding, ding moment. Oh my gosh, I can work with people and make a difference in their lives. It's analytical, it's creative. And on top of all that, I get to learn about money, all the things I never really got to learn as a kid, and help people not be poor like I was, hopefully. And, unfortunately, I wish that one of the hardest things about my job is we have people that come to us all the time that need help with budgeting or things like that. And we don't have time at the granular level so much. And most of our clients are pretty successful. They're typically 500,000 plus investable assets. We work with a lot of really successful small business owners as most of our clients, which I think feeds well into your audience. But still want to do, and that's part of why I wrote these 2 books, was to help in other ways, even if I don't have time necessarily to meet with every single person that does need help.
Well, your 2 books, the first one was Timeless Principles of Financial Security, right?
Yes.
And that was the first one. And you wrote that.
Did a better job on that than you did on the name of our company, even though it's even longer.
You wrote that one about 12 years ago.
That's right.
And then your latest book that just came out this year is Chasing Chances. I think it's an interesting title. Chasing Chances, How Smart People Lose Money Investing. And I want to dive into a little bit about what each of the books teaches and why you wrote them. But I think it's an interesting point. You can only do so much, right? You can't be all things to all people, even within wealth management and as a wealth advisor, as a CFP. People need a lot of help in finances. They need to learn how to budget. They need to learn how to pay their bills on time. They need to understand credit. There's a lot of things, and you can't do all of that. But I think it's interesting that you decided to write your book, or both of the books, to try to help serve those segments of the population as well. That again says something about your heart. You're wanting to serve even those that you don't have time to, or that just aren't at the level where they need to be to work with Capstone. So was that a motivation to write the book? Really, was it a big piece of it, or was it just kind of an afterthought, or you realized kind of 2020 hindsight that was a benefit of?
Oh, no, absolutely. Yeah. It's just, how do I expand my sphere of influence sounds like a selfish thing, but it's just
your reach, right?
Your reach. Yeah. That's a better way of saying it. And also I felt like it was a way for my own clients to get greater value, greater understanding. We only have so much time in the meetings that we have together. I felt like there just wasn't enough time to share all the things I wanted to share that I felt like they needed to know. And so it just seemed like a more efficient way for them to absorb the information. They could take their time. They could go back and refer to things. And it's had all those benefits. And I've had several clients tell me that they've read this other one's only a few months old, Chasing Chances, but the old one, Timeless Principles of Financial Security, I've had some clients say they've read it over and over again just to go back and review the principles. So that's kind of cool.
Yeah. I completely agree. I look at it a little bit like our YouTube channel. If you go and search up certainty management on YouTube, I've produced over 300 videos in the last few years.
Oh, that's a lot.
And many of them I did just so I didn't have to keep saying the same thing over and over. Now I just say, go watch the video because it's a time saver and it extends that reach, and you can serve more people, right? You can help more people in the limited time that we have. And so books the same way. I've published 2 books myself, or I've been in 2 books as a contributing author. I have a third one.
We talked about that. You have a third one coming out. Oh, congratulations.
Coming out soon. It's about visionary CEOs. And so kind of talk about vision and how you build upon that. But
wow, great topic.
Anyway, so tell us quick about your family. We got about 2 minutes here before our first break. Tell us a little bit about your family. I know there's a little bit of a joke about how many twins you have in your household.
Oh, okay. We have 2 daughters. They're 18 months apart. They're both college age now. And then we have twin boys. They really are twins, but the others are not. So,
and then you have 2 shorties, right?
Yeah, 2 shorties that are really their sisters too. So kind of like 3 sets of twins, I guess.
What is a shorkie exactly?
It's a Shih Tzu Yorkie mix.
Okay. And you have you're much
like 4 or 5 pounds. So when you look at my iPhone, my iPhone thinks that they're cats. When you search the pictures of cats, it shows my dog. So they're pretty tiny.
And of course, your much better half, Andrea.
Yes, Andrea,
phenomenal.
She's incredible.
She's an amazing lady, and we're blessed to know her and you. So anyway, we're up against our first break. We take a couple of breaks here in the show, but if you're here for the first time, thanks for joining us. We're going to learn a lot from Adam in the next segment here as we talk about how to avoid those pitfalls that so many smart people are making in their investments and in their wealth planning. So thanks again for being here, Adam. And folks, we'll be right back.
Follow Voice America at Facebook.com/Voice America for juicy updates from your favorite radio shows and podcasts.
Certainty Management can help create more certainty in your life with our deep discount health insurance options, even for 1099s, part-time employees, volunteers, and more. Pay less to protect yourself, your loved ones, and your team. Call 888-684-3122 for a free quote today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, T-E-A-M, like Mary.com.
If you're a nonprofit in need of funding, we can help. Certainty Management is a cost reduction firm that also helps churches, schools, sports teams, and other nonprofits raise unlimited zero-cost funding. Best of all, you don't have to sell anything or ask for donations. Call 888-684-3122 to learn more today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, T-E-A-M, like Mary.com.
When it comes to business, you'll find the experts here. Voice America Business Network.
You are listening to Finding Certainty with Patrick Laing. Have a question for Patrick or his guests? Join us on the show at 866-472-5790. That's 866-472-5790. Now, back to the show with Patrick.
Well, welcome back to Finding Certainty. We're visiting with Adam Dawson. He's the CEO of Capstone Capital Wealth Management. Is that the name?
Capstone Capital Wealth Advisors. Close
Advisors.
enough. We'll get it by the end.
I knew I was going to slaughter it, but
it's a long name. It's way too long.
I usually think of just Capstone Capital, but I knew there's more to it. So the wealth advisor part is really important because you do more than just investment advising. You're not just a financial planner. You do a lot more at Capstone Capital. And you've talked about it in your books. I'd like to get into those a little bit maybe later in the show, but a thought came to me as you were telling a little bit about your background and the fact that you are a composer. I mean, you wrote an orchestra. You wrote an orchestra that your high school performed back when you were in high school, right? But I think there's a parallel there because when you're composing, you have an idea of where you want to go and what you want it to look like and sound like. And I'm interested in how that philosophy and that background, that experience as a composer has translated into what you do as a financial planner, as a wealth advisor. Because you do the same thing with a client, right? You have a goal, you have a direction you want to go, and you need to structure it. You need to, there's principles that have to go into it. You can't just wing it. You don't just throw things at a wall and hope they stick. And you don't do that with composing either, right? So am I off there, or are there some parallels?
Oh, absolutely. Huge parallels. And that's it. It's funny when people find out that I majored in music composition and I'm a composer. That I just love, I wish I could have throughout my whole career recorded all the videos of everybody's reaction, like what does that have to do with wealth management? How did you get from that to this? And believe it or not, there are big parallels because of that. It's that perfect mixture between the analytical side and the creative side and having that vision. Right. So, and actually, I just recently read, if you haven't read it, you should, Gino Wickman's Genius, the father of the entrepreneur operating system, EOS, his book Traction and Rocket Fuel are really good. Rocket Fuel, he talks about how all businesses need a visionary and an integrator. So the visionary is the big picture, future, where are we headed? And then the integrator is boots on the ground. How do we translate that vision into action? And so that book that I just read like in the past few months helped me understand even better how my background as a composer has really helped me in my business, not only in managing the business, growing the business, but also in helping our clients to catch that vision of their future. And not everybody has that ability to see the end from the beginning or to create something out of thin air, for lack of a better term.
Right.
At the next level, I look at these master plan communities around our town and other cities, and I think about people like Jeff Bezos, Steve Jobs, Elon Musk. Love them or hate them as people, they're changing the world in incredible ways. So you talk about vision,
right.
And I'm surprised at how many people don't really understand what it's going to take for them to have the lifestyle that they want in retirement. What do they need to do between now and then to make that happen? What's possible? And sometimes they estimate on the low end. They say, wow, I mean, we've had clients with $5 million feeling guilty spending, $5,000 a month. Saying like, oh, can I afford this? Can I afford that? And it's just like, wow, you have plenty of money. Go out and spend it. You've worked really hard. You need to enjoy that now.
Right.
So there's something that's really cool about helping people to catch that vision and to recognize the blind spots, because we all have blind spots. And exactly. In some ways, sorry, go ahead, Patrick.
I just said exactly. Oh.
Well, and in some ways, I feel like I'm at an advantage because I get to see all stages of life all at once. We have clients at all stages of life. And so I see the things that people are going to be dealing with when they're in their 60s, 70s, 80s, 90s. Mm-hmm. A lot of times, I think we don't like to think about it, right? We don't like to think about death. We don't like to think about getting sick. We don't like to think about losing money. But these are facts of life. And so we try to help prepare people for those things.
Well, I see this a lot in business and in many of my guests who have built very successful companies. I think of one in particular. His name is Win Claybaugh. He started and he's the co-founder and the director of Paul Mitchell, the schools.
Oh, wow.
From this one little office to over 1,000 locations, and I mean thousands of students and so forth and so on. He's big on those two topics, on traction and rocket fuel, right? Vision and boots on the ground. And you have to have both. And the challenge is it takes more than being intelligent, right? I think one of the biggest reasons to partner with a firm like your own is that you have experience. You have insights that even an intelligent person may not have because of the lack of experience, but you also have perspective. And you hit the nail on the head, I believe, when you talk about how you see all stages of life. You have young customers who are just starting out. You have those in their middle-age years and those who are into their retirement years. And nobody has that without working in a role like you do and working with several different clients and investors and so forth. How can you have it? We all have just our own perspective, which is very limited, but you're on the other side of the table. You're looking at all of these different experiences. And from that, I think that's as valuable almost as the training you've had, the certified financial planner courses and everything else that's gone into that. I think those two are both critical in being able to serve your clients well. Let's talk about what some of the mistakes people are making are, and how you try to offset that. How do you tackle the uncertainty that is there, the risk in any investment and the uncertainty that's in the market? How are you offsetting that and helping your clients hedge their bets, if I may? How are you helping them avoid the pitfalls as much as is possible?
Great question. And I wish we had time to talk about how we do that in all areas of their life, but maybe we'll just focus on the investment side right now. So human nature is absolutely the biggest, enemy or threat? That's the word I'm looking for. Our own human nature is probably our biggest threat to investment success. And
I would agree.
Okay. And the financial world, especially media, CNBC, some of them, well, not to call it any specific names, they're in the business of providing education, and we're really grateful for their services. But sometimes they get caught in this loop of, how do I focus on the sensational market news of the day? Because that's what people want to hear. Fear sells, as we've always heard. And so, educated people who are trying to make good decisions, trying to be well-informed, are just constantly bombarded with this soup of, how do I know what to do? Because it's just way too scary out there. There's so much uncertainty.
Right.
And so,
and there's so much, if I may, there's so much volume, right? Where do you start? I mean, I'm a firm believer in hiring professionals who do what they do, because they can cut through the noise and narrow into that 1% that's really going to be helpful. I mean, I'm overwhelmed by the amount of information, not just the quantity as much as the quality.
Oh, totally. And and we're fully aware of that. And we view that as one of our most important jobs, is to help our clients filter through that. And we get questions all the time. Hey, what is Bitcoin? Do I need to focus on this? What does it mean? Okay, we don't need them to become experts on Bitcoin. We know we're researching those things. We can tell them what they need to know, help them make good decisions, what's happening in the market. So, but back to your question, what are some of the pitfalls? How do we help, quote unquote, protect them from themselves? I'll tell you, one of the biggest things is trying to time the market. So everybody wants to figure out what's the right time to get in, what's the right time to get out. And of course, that's perfectly natural. And believe me, I wish I knew, because I would make a lot more money for myself personally and for my clients. But the fact of the matter is, nobody knows. It's completely unpredictable. It's easy to go back, as they say, hindsight's 20/20, but foresight isn't. It's easy to go back and say, oh, wow, I wish I had invested in March of 2009, all of my life savings in stocks, because then I would have had this rocket ship up. But in March of 2009, everybody in the news was saying, man, you thought that first 50% drop was bad. Wait till the next 50% drop hits. So it's really, really hard to stay invested or maybe even put more money in after you have a big drop like that. We experienced the same thing with COVID more recently, March, April of 2020. Huge drop in the market, probably the biggest drop we've seen in that short of a time period, with possibly a few exceptions a long time ago. But what people probably should have been doing is investing a lot more at that time, because then the recovery was just, so astronomical. Nobody could have predicted that. So timing the market doesn't work over the long term. There are lots of studies about this. There's one in particular by Dalbar Research I really like. They look at 20-year, kind of rolling 20-year periods. And no matter what 20-year period you look at, the numbers are similar. I can't remember what the latest ones are, but let's say if you could have earned 8% average annual rate of return over a 20-year period in the stock market, they're saying the average investor only earned 3% per year because of this, trying to figure out the right time to get out, in and out. They wait for it to go down, then they pull out because they're afraid of losing more. They want to wait for it to look like things are getting better. It recovers, then they get back in because they feel more certain, but it's too late.
Well, I know your firm is one of your principles, if I may, and I've learned this from knowing you and talking with you. I've looked at your website, et cetera, et cetera. But one of your principles is time in the market versus timing the market.
That's right.
And that's exactly what you're talking about. And your approach to working with your clients is not trying to time it right and pick those winners. It's more just a systematic, disciplined approach. It's consistent. You diversification is part of it. Trying to minimize risk. You have goals, but it's this comprehensive plan that is, and I love that word, systematic and disciplined, and takes time, right? It's not something most people do overnight. Very, very rarely do savvy investors hit it big. There's of course exceptions to that who bought Bitcoin at the right time or something like that. But for the most part, true wealth management takes time. And it takes a plan. It's a roadmap, and it takes time to get there, as any journey does, right?
Yeah, I love this quote by I think it was Paul Samuelson, economist, said that successful investing is more like watching grass grow.
Right.
It's not exciting. It's very boring. It's long, slow and steady wins the race. But I totally get it. I mean, we all want to make as much money as we can as quickly as possible. That's human nature. There's nothing wrong with that desire. It's just most of the time people end up losing a lot of money when they try to take shortcuts. And this is not just investing. If you think about it, this is how life works. Am I going to have a better marriage if I take my wife on a big, 2-week fancy trip once a year and then never go on any dates or spend much time with her throughout the year?
Right.
After that, that's not going to be. It's just these little check-ins every day and weekly, dinners and all those things. That's leads to much more success in my marriage. Or what about working out, right? I'm much better off doing just a 20, 30 minute run every day or 20 or 30 minutes at the gym than I am once a month, for 12 hours in there, just hitting it hard.
So true.
It's the same with investing.
Well, as I looked at your website, you have a list of the principles that you stand for, and words like prudence, objectivity, discipline, diversification, efficiency, flexibility, simplicity, accountability, transparency, I think is a good one. Collaboration, independence. These are all words that resonate of certainty for me, even though you're working in a very uncertain space. The market is not something you can control. You can try to hedge for it. You can try to plan for it, to stay in long enough and the time in aspect or element to try to offset it, right? But all you can do as a wealth advisor is approach those risks and that uncertainty with principles like this and try to, in a sense, offset or hedge for the risks and the uncertainty that is out there. And that's a tricky balancing act, isn't it?
Oh, absolutely. Can I touch on you mentioned diversification as one of the principles. That leads to the second principle in my book, Chasing Chances, that I talk about. So timing the market is the first big mistake people make. Picking stocks is the second big mistake people make. And it's this, okay, what's the one thing, how much have we all heard this? If only I bought more Apple stock in the 80s, or if only I bought more Amazon stock in 2000s. Everybody wants to find that needle in a haystack that's going to be their saving grace. They're almost their lottery ticket. And yes, some people do get lucky. I'm not going to deny that. But it truly is luck. Nobody can predict which stocks are going to outperform in the future. And believe me, this is a multi-billion-dollar industry. There are tons of people trying to figure this out because everybody wants to know. It's a really big business. But if you look at academic studies, you take away all the sales pitches and look at what's really happening. These people with PhDs in financial analysis and modeling and Nobel Prizes in economics, they're saying it can't be done. I mean, it can be done, but it has more to do with luck than skill.
Right. So
most of the time, you're better off with that diversification. You can get really great returns in the market without so much risk. And there are no guarantees, let's face it. Even if with a diversified strategy, you don't know if that's going to work or not. But you're dramatically increasing your chances of having a successful outcome by doing it that way, rather than just trying to pick a handful of stocks and you could lose a lot of money. And we have seen people try to do that. Most of the people that try to do that eventually cry uncle and say, okay, this is stressing me out and I'm losing tons of money. Yeah, I made a lot of money, but then I lost it all, the next day. And I'm not going to do this anymore. Let's just take a more disciplined approach.
Well, I mean, we live here in Las Vegas, right? It's like going to the casino as your investment plan.
Yeah.
The house always wins. And how do you offset for that? And you made a comment about the sales pitches that are happening. We're up against our next break, but when we come back, I'd like to get into a little bit about what is a fee-based wealth advisor firm.
Sure.
How that differs from conventional commission-driven financial planners, because there's a big difference. There's a difference between investing based on sales pitches and what's the hottest thing right now, and a concentrated, disciplined, strategic plan that is well worth a small fee or percentage of holdings. And I'd like to talk a little bit about that if we can, but we're up against our next break. We're visiting with Adam Dawson, CEO of Capstone Capital Wealth Advisors. Did I get it right?
That's right. Good job, Patrick.
Third tries the charm.
That's right.
Yeah, we'll be right back, folks. Hang tight. Don't go anywhere. Thanks.
Voice America is on LinkedIn. Connect with us today.
If you're a nonprofit in need of funding, we can help. Certainty Management is a cost reduction firm that also helps churches, schools, sports teams, and other nonprofits raise unlimited zero-cost funding. Best of all, you don't have to sell anything or ask for donations. Call 888-684-3122 to learn more today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, Team, like Mary.com.
Certainty Management can help create more certainty in your life with our deep discount health insurance options, even for 1099s, part-time employees, volunteers, and more. Pay less to protect yourself, your loved ones, and your team. Call 888-684-3122 for a free quote today. That's 888-684-3122. Visit us on the web at CertaintyTeam.com. That's Certainty, Team, like Mary.com.
Voice America Business Network, the bottom line in business.
You're listening to Finding Certainty with Patrick Laing. Have a question for Patrick or his guests? Join us on the show at 866-472-5790. That's 866-472-5790. Now, back to the show with Patrick.
We're back with Finding Certainty. We're visiting with Adam Dawson. He's the CEO of Capstone Capital Wealth Advisors. And we've been talking about some of the principles and some of the challenges that we run into as what we think we're smart investors. Many times, as the title of the show says, smart people lose money. And Adam's job and his career for the last 20 plus years, he's helped hundreds of people to offset and hedge for both the poor decisions that we make as investors and the risks in the market and the human nature, the challenges, etc. Are there other principles that you'd want to share, Adam, that are important as we broach this subject?
Yes. So we talked about the importance of not trying to time the market. It's all about time in the market, not timing the market.
Right.
We talked briefly about the importance of not trying to pick the right stocks. And obviously, I go into this in much greater detail in my book, just really interesting stories of people I've seen try to do that and how much money they lost, and just great stories that a lot of people will be familiar with. Companies like Tesla, kind of the rise and fall of that, and the FANG stocks, some of those types of things. So the third principle is chasing what's hot. So that we always have this desire to look at, oh my gosh, look at how well real estate's doing right now. Let's just put everything in real estate right at the wrong time. We saw that in 2005, 2006, 2007.
Sure.
Where people,
we know how that turned out, right?
Yeah. And I love real estate. I'm not saying don't own real estate. I'm just saying we need to have realistic expectations about, just because it's a physical property doesn't mean it can't lose value. And you might have to hold on to it for a really long time to be able to see that value increase. Cryptocurrency is another good example. Again, I think crypto is the wave of the future. I think it's here to stay. I think it's an exciting new technology that's going to do a lot of good, and will change the way we do business going forward in ways that we can't even imagine right now. Probably like the way the internet has changed the way we do business. But it's just really, really early right now. Very, very risky to put too much in cryptocurrencies. But my point is everybody wants to look at their neighbor that, got 1,000% return in Bitcoin, and they think they're going to do the same just by jumping in right now. And you have to be really careful at looking at track records, especially really short track records of how something performed, and expect it to do the same thing. Most of the time, coming back to the stock market examples, if you're looking at a mutual fund or a stock or an ETF, it's an exchange traded fund. It's kind of like a mutual fund. My wife is, every time I say it, my wife is like, what the heck is an ETF? So I have to remember these are technical terms, but you look at a mutual fund, ETF, or stock that's done really, really well over the past year. Most of the time, that's probably going to be the worst performing fund the next year.
Is that right?
The amount of risk that they're taking to achieve that really, really high returns, like way outshining everybody else, are also the same amount of risk that means that they can lose a lot of money when things turn against them. So track record investing, you have to be really, really careful. Yes, historical data provides meaningful information when you're looking at big classes of data. So the way we look at it is over long periods of time, it's reasonable to expect that stocks will outperform bonds, just as an example. Because, over most time periods, they always have. Doesn't mean they always will for whatever time period you have to invest for. There's risk there still, no guarantees. But it's more likely that they'd outperform bonds just because of the nature of stocks. So if I'm taking more risk, you have to think about this from a philosophical standpoint. if I'm taking more risk as an investor and being prudent by diversifying it among, we actually invest in thousands of different stocks. We consider that to be true diversification. Then, because of the way that capital is raised, these people, the companies you're investing in, are willing to give up a part of ownership in their company because they expect that it's going to grow. You expect that it's going to grow beyond what you can earn at the bank or in bonds, where you're just owning your money. And so that's where the returns come from, is embracing that uncertainty. If you want certainty in your investments, you have to just buy CDs. Maybe, annuities have some level of certainty, some things like that. But then that's going to dramatically reduce your returns because you don't deserve it. Sorry. But if you want certainty, then you're not entitled to the higher returns that come from taking the risk.
Mm-hmm.
That's the way we look at it.
Risk and reward, right?
Mm-hmm.
Turn on investment. Interesting comment, because if you do, I completely agree. If you want certainty in business, you're probably never going to start your own business. You have to be willing to embrace the uncertainty and the risk and the long hours and the sacrifice and so forth. And that applies in everything in our life, right? You compared it with a marriage, right? That 2-week vacation once a year might be at one of the nicest places in the world, but that is not sacrifice. It's not time. It's not paying the price that it takes to have a great relationship. I think it's a great parallel between that and your wealth management or building a business.
Well, thank you. And I dive deeper into that in the book, Chasing Chances. But coming back to the marriage example, my heart was beating so hard when I proposed to my wife, Andrea, that I was like hugging her right before, and she's like, "What's wrong with your chest?" I mean, she could feel my heart. It was like about to pop out of my chest. She had no idea it was about to pop the question, but I just think, that was, scary is not the right word, because I had full confidence that we would have an amazing marriage, and I was very, very excited. But it's still, we don't get to know how our marriage is going to turn out when we get married, right? Nobody does. Right. Obviously, I doubt very many people get married with the hope or expectation of getting divorced. But that was, with my parents being divorced, that was a fear that I had. And so, but I was willing to embrace that uncertainty. But it doesn't mean that we throw all caution to the wind, right? What are things that I dated her for a long enough period to where I felt like I got to know her, I got to know her family. We talked about goals. And then since then, I've done everything I can do to make sure we maintain a good relationship that reduces my risk of having a bad marriage. Still no guarantees. So it's the same thing with investing, understanding what the principles are that increase our chances of success. We're not just going to throw all caution to the wind and say, got to take risks to get a reward. No, we're going to be prudent about it. And that's really our job, is to help our clients view what are risks that you can take that are prudent, where you have a high likelihood of a positive outcome.
It's a good point. That's what we're trying to do, is increase the likelihood of a favorable outcome. And there are things we can do. There are things, there are strategies, there are insights, and there's emotion that goes into it. And you, as a wealth advisor, you have to get to know your customer. You're not just using a cookie cutter format that applies to every customer in the same way. I know it's customized and tailored to them and their goals and their emotions and their needs. Obviously a big part of it for many customers, I'm sure, is legacy. What are they going to leave behind? How are they going to leave it? How can you protect it? I want to go back to the question I had earlier before we run out of time here, but the difference between a fee-based firm like your own and commission-driven financial planners or investment advisors that are out there. I know there's a big difference, and I know you don't want to slam on your competition because that's not who you are, but I think it's important to clarify the difference for our listening audience.
Yes, and there are pros and cons to each, and full disclosure, I started out more on the commission side than on the fee-based side, and that's common for a lot of advisors who are just starting out. But we're seeing a shift in our industry as a whole, and this is just like all things in the world. The market changes over time, consumer demand changes over time, And so our industry is fraught with, just historically speaking, fraught with hidden fees. Nobody really understood what they're paying. It's all this, people not even realizing there were any fees involved, but you have all this really big commissions that brokers would receive when they sell a stock, for example, or maybe have life insurance policies, annuities, some of those types of, those are traditionally the commission-driven products. And so the advisor can only make money when he recommends a specific investment or a specific change. And so the way we do it is we say, there's no such thing as being 100% unbiased, but we're trying to remove as many biases as we can. Mm-hmm. And we say, we'll just charge a small percentage of the total wealth that we manage for you, whatever investments that we're managing. Not their, if they have real estate, all these other assets, or their business, we're not charging on that. It's only the investments we're managing. Mm-hmm. And then that way you don't have to worry whether our recommendations are based on how much money we're going to make for recommending a specific product. Mm-hmm. Because we make the same amount of money whether we're buying and selling stuff all day, every day, or not. And the more our clients make, the more we make. And so we feel like that puts us on the same side of the table as them. And then they seem to prefer doing it that way too. The other thing I like about that is with commission, usually the advisory gets more of a bigger pay up front, but then they don't receive any money after that unless there's something new they can recommend. And so they tend to have less contact with their clients, whereas we have a motivation to be more engaged with them on an ongoing basis because we have to earn that fee every quarter.
Exactly. I see it as more of a partnership with your clients, and within the actual structure, the framework of that partnership. And you talk about having to earn it every quarter. Really, you have to prove why that fee is warranted. But you're looking at it as a long-term relationship. You're looking at it. You want to serve this customer and their heirs for generations, and that says a lot about your approach to business, the model itself. I think it's just a completely different feel to it. So we are almost out of time here. Is there one last thought or insight you'd want to share with folks about this entire topic? Down to our last 2 minutes. But what would you say just in closing here, Adam?
Yes, I just want to say thank you for the opportunity, Patrick. Appreciate our friendship, and it's just been so much fun to share these thoughts together. Just parting words of wisdom, I would say the biggest risk of all is to not invest. There is great hope for the future. Yes, it's a scary world out there. Yes, there's a lot of uncertainty, but that uncertainty is never going to go away. And it's the uncertainty that allows us to get the outsized returns. The people that learn how to embrace that in prudent ways are the ones who will succeed in the long run. And I'm very excited about all the wonderful things that are happening, new products, new services, millions of people going to work every day trying to make the world a better place. That's what drives market returns going forward. And that's what has created and will continue to create the tremendous wealth that we see throughout this country and throughout the world.
Couldn't agree more. As we try to create certainty in our lives, and we talk about this every week, we need help. We need advisors. We need coaches. We need to step back sometimes, or sometimes we're a little bit too close to the topic. And it's important to step back, make a plan, have a roadmap, and rely on those who have trod that path ahead of us, those who have that perspective of looking at hundreds of scenarios, not just their own. And obviously you're doing an amazing job at that, Adam. So thanks for being on the show. I really appreciate it. I appreciate our friendship as well. And continue with that servant's heart. And I know you'll continue to change lives, and as you are changing mine and many others with me. So thanks for listening, everyone. Thanks for being here on Finding Certainty. And Adam, always a pleasure, my friend. Thanks for being here.
Likewise. Thank you. Had a lot of fun.
All right. Have a great weekend, everybody. Take care. I know you've got an appointment starts in about 2 minutes here. So thanks for squeezing us in. I really appreciate it. Had a great time with you this morning. And
no problem.
Take care, everyone out there. Have a fantastic weekend, and we'll see you next week.
Thanks for tuning into today's episode of Finding Certainty. We hope you've gained some more insight into how to create more certainty in your own business or nonprofit. Join us next week for another taste of the Certainty Experience. Until then, we wish you greater certainty in all that you do.